Hello, good evening, people. So it's Negrasam FX here again. I want to share a setup I took yesterday. It's delivered. It was today. It's delivered. GBP USD. Now, what do I always need to see before I take my trades? I want to see a breaker block. I want to see price sweep a low, which it did here. A breaker block, then an order block, and a break of structure like this. So I want to see a breaker. I want to see price sweep liquidity, sweep an old low, then come above to break structure above the breaker block. Are you seeing it now? I want to see that, and then I would now check down to see the other block that caused that break of structure. So that is what I always want to see to take a trade. Are you seeing it now? So what was my thought process? Let me remove all this. This is the trade that played at 5.84 risk to reward. So my thought process in this was this. So the other block, this is the candle, the last candle before the impulsive candle that caused this massive push. So this is it. So as I saw that price was actually was buying from here. Let me do the order flow. Going, are you seeing it now? Breaking structure, came, broke structure, came down, swept liquidity, went back up, and then price returning down. Are you seeing it now? Came down. So I was confident that if price comes back here, that it's going to what? Buy back up, because I have everything I needed here. Are you seeing it now? So I was just very confident about it. Now yesterday I would have waited for price. I would have said I want to wait for price to I would have waited for price to come here before placing my buy order. But recently, from my backtesting and my study, I have listened very carefully to what I want to say now. It may just be what you have been waiting for. I have been able to discover a confirmation entry. If an order block is going to hold, I've been able to discover how to confirm that even before it gets to the other block. And one of the things is that it will give you inducement. Inducement in such a way that when price is on its way back to that other block, just before it gets to the other block, it will give a fake shift in market structure. So when price gives you a fake shift in market structure, then when it comes back, that other block is most likely going to hold. Let me come again. When price is returning back to an order block and close to it, when it gives you a shift, a fake shift in market structure, shift is going back, then just know that that order block is most likely going to hold. And very important is that you are not just taking anything as inducement. The inducement should be from this point now to this point. The inducement should be around 50% of the range. Look at this range. From this place I pick my order block to the highest point. You can see it now. This is 50%. This is half of the range. The inducement is located around. It should be around here or below, but it should not be above. The inducement should not be hanging like this one now. You can't take this as an inducement. Are you seeing it now? Hey, you won't take this as an inducement to now be buying. Are you seeing it now? I also regarded this as a second inducement, a kind of not for this other block, but still for this other block, because if you look at it, it is still 50% to it. But this does not really qualify. Why? Because it is not on its way. It is not like it is on its way to this place. You can see that it's just a lower high for this uptrend to continue. But you can see that this market gave a downtrend on its own in this particular time frame. The market gave you a downtrend, showing you that it is on its way down. Showing you that it is on its way down. I don't know if I'm communicating. So when it was coming down, it gave you a shift in market structure. Are you seeing it now? On this 1 hour time, I'm going to show you clearly. So I saw this inducement and then I knew that this was going to hold. If not, I would have waited for price to give me another new fresh setup here before buying. Are you seeing? I would have waited for price to give me a fresh setup here. Like this particular now, there's another block. My next point to buy GU is here. If it is coming down, it does as if it's shifting market structure. I know that this one is going to hold. Are you seeing it now? I hope this makes sense. This communicates. So that is what I saw yesterday. Now you are not seeing it clearly. Let me remove this. You are not seeing it clearly here. This shift in market structure. So usually what I do is that once I've seen this, I go to 15 minutes time frame, lower time frame, to refine and see the order block clearly. So when I came here, I was able to see, okay, I think I refined my entry to this point, this last candle, but I just came above it. I don't usually use the other block. I just came above it just in case. I don't want to hear that I had missed entry. So I marked the whole of that zone. I was just hoping that price does not go below it, which it did not. Are you seeing it now? Can you see it now? So this is the place. This is the inducement I was talking about. It is clear on 15 minutes time frame. Are you seeing it now? Price came and did as it shifted structure. So when I saw this, I knew that okay, the one below it is going to hold. Are you seeing it now? I knew it was going to hold. So I just came to this place. That was yesterday night. I didn't want to hear that I had a missed entry. I put my pending order. I placed my order here. Then I put my stop loss just below this guy here. Then my TP was here. No, my stop loss. No, that wasn't my stop loss. My stop loss was because I have an amount, but I didn't want it. 0.01 I traded. I'm very big on my risk management. So my stop loss was, I think my stop loss was here because the trade gave me a 5.8 R. Yes, I just placed my stop loss here. I placed my stop loss there. Where is that? Just below, yes, just below the other block, because I was almost, sorry to say, I was almost sure that this other block, I was almost sure that price won't come below this guy, this other block, because there's inducement. This is liquidity already on it. A lot of stops are here. On the other side too, the same thing. So I was almost sure that price wouldn't come up below here. If it comes below it, it has invalidated it, and there's no any fair value up or anything that price would want to come and do here. So I'm very stingy with my stop loss. It won't be tight, but it will be reasonable. It will be small. I don't risk more than 0.5% of an account per trade. I don't risk more than that. If it's going to be more than that, I'll cut the lot size by 2. I wanted to buy with a lot size of 0.02 yesterday, but as I saw that 0.02 was giving me something, I cut it down. It was even less than 0.0. I wanted to use a lot size 0.002. When I saw that the amount I will risk will give me a risk amount of more than 0.5%, I cut it down. So my risk was less than 0.5% yesterday. So that's how the trade played out. Are you seeing it now? So I just hope that that you were able to pick one or two from it. Now there's other trade also that I am currently on. I took that one too yesterday. I've not taken any trade today. I took that one too yesterday. Okay. This is GBP JP